J.B. Hunt misses analysts' first quarter earnings and revenue estimates. Truckload carriers' first quarter results don't appear to be in jeopardy after the J.B. Hunt report. Marten Transport reports best ever net increase of more than 30% in first quarter of 2019. What gets hauled to Vegas stays in Vegas. For FreightTech headlines, we have FreightTech investment surges in 2019. ValueAct Capital believes that Nikola Motor Company is a game changer in the freight industry. On-demand warehousing startup FlowSpace raises a $12 million Series A. And Singapore collaborates with Volocopter to add air taxis to its skyline. I'm JP.
And I'm Chad.
And we discuss all these issues and more on this week's episode of What the Truck.
TriumphPay is the leading carrier payment platform in transportation. With over 50,000 carriers paid, TriumphPay helps to drive capacity, efficiency, and cash flow for brokers and shippers. Visit TriumphPay.com to learn more. Yes, it's great to be here. Zach Strickland, Sultan of Sonar and earnings analyst here with us.
Hey, guys.
So great to have you here.
Thanks for having me.
Well, let's play a little bit of What You Drinking.
Sick action, bro, dude. I am sipping on a Little Harpeth Brewing something. I really don't even know what the name of it is.
Upstream.
An Upstream.
It's a San Fran lager.
We're all sipping on an Upstream.
It's a San Fran lager.
It's one of the only American original beers. Styles.
It literally says San Fran. Why did I think they were from Nashville? Oh,
they
because
are.
It's a Nashville.
A San Fran lager is a style.
Anchor Brewing
Anchor
Company.
Steam style. Well, I just kind of fell into this.
It's a little bit darker than a typical lager, right?
I fell into this six-pack, man. I tell you what, lagers are hard to do. They're hard to do. You got to keep it at 55 or below the whole brewing process. A lot invested in that. Not an easy way to go.
Is a normal lager like Budweiser? Is that a lager?
It is a lager.
It's more of, I feel like
it's a pilsner, which is a Czech lager. I mean,
well,
the
name
ask
lager,
a question that you already know the answer to.
Well, lagers come from German, which means to store or storage. Is that right?
It's so that's what we're drinking, and it is delightful and frightful at the same time.
Yep, earnings season is back, baby.
Yeah. But before we get to that, JP, you just went to Orlando for something really fun.
Oh, did I?
You just got back from the TIA. I don't know the full name of the conference.
Transportation Intermediaries Association, which is basically the big broker hoedown.
I went to it last year in
you did? I didn't know that.
Desert.
Yeah, how was that?
Well, that was a year ago, and we talked about it here on What the Truck. But let's talk about what you went through right now, man. How did it go, man? Any takeaways?
Yeah, it was really interesting. I got to hang out with a couple trusted sources and friends of mine in the brokerage industry. A lot of brokers out of Chicago, a lot of people from Chattanooga down there. Saw Chad Eichelberger down there.
Any themes and takeaways and stuff?
I think one theme for me actually more interesting than meeting all the small little brokers who are worried about convoying over freight. More interesting than that to me was really learning more about the sort of ancillary services that other companies offer to freight brokerages to help them unlock high growth. And I'll just briefly mention two of those. One of them was this Colombian-American guy, Roberto Cadena, who has this company called Lean Staffing Solutions that basically they have all these huge call centers throughout Colombia that do a lot of administrative calls and inbound carrier calls, weekend and night dispatch, track and trace, compliance, collections, stuff like that, for U.S. logistics companies. And that was really interesting. That they offer about a 40% cost savings on the position, all in. But they said that what's interesting about it is that you actually get a better quality person in Colombia than you would for the same kind of hourly call center job in the U.S. because of the lack of economic opportunity in Colombia. These are bilingual, ambitious college graduates who are excited to work for a U.S. company.
Wow.
They're in branded offices, so it'll say, whatever, like Molo or Arrive or Nolan Transportation Group on the office. All of their stuff is like they connect through VPN to your actual systems, and it's all segregated. It's really cool, and
brokerage going globular.
Yeah, and freight brokerage tapping into global labor markets, and so they've grown about 1,400% in the past 3 years.
That seems all right. I mean,
It's fine.
So they're up to about 650 people. They've got another 100 in training. They take them through a really rigorous logistics course. The guy who owns the company built up a freight brokerage and sold it. So he knows.
Had some capital maybe to work with.
So that was one really interesting. Got to spend some time with Robert, really fun guy. Got to meet some of his clients, and it was cool. The other people I met were from a bank called John Marinson and Jason Lavoie of Wintrust Bank in Chicago, and they also specialize in services for brokerages. And what they do is they do this what's called asset-based lending. So they have collateral and they lend money to these brokerages. And what they do is they basically
Like a bank.
Yeah. But it's not like a typical commercial line of credit, because when you think about a fast growth brokerage, you're talking about companies that have really tight cash flows, because they have to pay their carriers before their shipper customers pay them. And so the faster they're growing, the tighter that gets. And so what Wintrust does is they lend them up to 90% of their accounts receivable. Annual yield on this kind of line of credit is 6 to 8%, not crazy.
Not a 23% normal kind of credit card.
Yeah, and you only, as they make this credit facility available to you, and you only pay interest as you draw from it, and then it grows with your accounts receivable, whatever your accounts receivable. So if you're growing 100%, if you're doubling every year, like a lot of these like young brokerages do, then you're just getting more and more access to capital to fuel that. And they have a lot of customers in Chicago. And it was neat to just kind of meet, and they were in the process of negotiating a deal with some other brokers that were at TIA, and I got to kind of hang out with them, sort of watch them interact and talk about things. So that was I mean, I think for me, that was kind of the theme, was like all of the different enablers of high growth for brokerage.
No, I like that. I like that last one, because having been a financial analyst for a little while, the idea of not having cash for people that are growing fast is all it is essentially they're having to pay people faster than they're getting paid. Yeah. And that's why they have to have somebody give them money to help them grow faster. Otherwise, they rarely have enough cash on hand to make enough transactions.
Yeah, it slows you down a lot, because you have to build.
I've heard about this. Yes,
you have to build up a reserve of cash larger than you would normally do, and you could be using that to develop technology or hire more brokers or do whatever. But instead, you've got to keep it just in case your big shipper customer screws you over and doesn't pay you for an extra 30 days or what have you. Mm-hmm. So that was pretty interesting. And it's if you want to blow up and grow into like a $500 million, $600 million brokerage, like there's different ways of doing it, but this gives you more flexibility than factoring, because they're giving you the money instead of paying it to the carrier, and it gives you more control than doing an equity raise and selling to private equity or VC.
Absolutely, yeah.
So you get to own 100% of your company. So, I mean, I thought it was pretty compelling. These are two guys, they came from Wells Fargo. They're a Wintrust. They kind of specialize in this product, in this industry. They know it very well. And it was cool to talk to them and their customers.
Well, that's really cool. Apparently, those two companies and personalities, they seem to have left a mark. They just got a pretty big shout out right here. Sounds interesting to me.
And Roberto is going to be at Transparency 19.
Great, yes, and as a matter of fact, Transparency 19. is going to be our super awesome hot logistics FreightTech Innovation Conference coming up May 6th through 8th. I've said it a lot of times. I hope that's the right date. It's going to be in Atlanta, Georgia at the Georgia International Convention Center. We'd like to see you there. Right now, people, it's like a hockey stick. People are like just jumping in. We just crossed the 700 registrations threshold. And it's if you like to say that you are where it's all at and where it's happening, well, you better be there. It's going to be exciting. One of the things too, guys, we do What the Truck, our now award-winning podcast, if I may say so. What the Truck actually did lead to an opportunity to partner with SiriusXM Radio, and we've been doing it for a couple of months now. And we this last week we had some great, really compelling, I have to say, conversations with none other than Craig Fuller, but also a number of others. And one of them in particular, and this is a segue to our next headline. Scott Group, the managing director and senior transportation analyst at Wolf Research, he said, "Well, we were like, well, what's coming up, man? Like what are you guys listening to? What's the word on Wall Street?" And he was like, well, the most important company to look at is J.B. Hunt in their very first report. Because he was like, they're coming out Monday. They're one of the early reporters, and they are, they're so big. They've got a lot of different businesses, and it's intermodal, it's pricing, it's truckload, it's dedicated,
Brokerage.
Brokerage, exactly. And he's like, that gives us an overview of the different pieces that we're going to be listening to within the transportation landscape.
They're like a bellwether of what to expect.
Yeah, and so sure enough, JB Hunt has come out with some interesting reports, and guys, like I've said, like for me, earnings reports, it's been an acquired taste. But we are here with certainly an expert in earnings, and also JP. It wasn't an acquired taste. He's been really into it from the beginning as well. So you guys, why don't you give us an overview of what you think? And I'm going to add some of my little sauce, some of my little questions to I don't know if it's really as dour as it seems to be in some ways.
Yeah, I read this. I mean, and of course they came out disappointing. And anytime they're judged against expectations by industry analysts. So those analysts are essentially setting a stock price in the future when they come out with their earnings or their expectations. And when they come in below those expectations, the idea is everybody trades it back down. They sell off when it doesn't hit the earnings call. That doesn't always happen, but
yeah. And can I just add, and I think you and we were just talking a minute ago, who sets these expectations? $1.25 a share. It was way over what they had already been doing.
I get their math and the way that they do that.
Okay.
I mean, I understand it, and they need to do it that way because they have to value recency over historical.
Prisoners of the moment.
Yeah, and they have to do that. That's not necessarily a bad thing, but there's a little bit.
But they talk, and these equities analysts, if I may, they consult with management regularly. They have models, they update,
stuff.
They adjust their models, they have certain things, and their target prices are all based on a certain multiple of 2020 earnings or 2019 earnings.
Yeah, if they go through their earnings
I just don't
per
get
share,
some of the math.
Again, we don't need to go into that and
okay.
the math of that because I don't think anybody really needs to get into that detail. But it's an EPS is basically a process of converting earnings per share from what target price to earnings ratios are and things like that.
Okay, yep, that's enough of that.
Yeah.
But so there is some kind of formula.
Yeah, and people will change their PE ratios and stuff like that. And a lot of it has to do, anytime they're talking to people at the company is going to manage those expectations accordingly. They're going to tell them things that are going to lead them down a certain path. So, even internally, they're going to tell their employees the same thing. I know this because I was one of them. But they, it's not necessarily as accurate as we all kind of want it to be. And this one to me is a little excessive. $1.25 per share from $1.07 a year ago that feels so aggressive. I mean,
that's like a double-digit percentage increase off of a very good quarter of a very tough comp.
Yeah, thinking about historically, trucking does really well to grow like 5% in a year, which is just baseline, for most other industries.
And while 2018 was a crazy year, as I feel like talk about each and every day right now, it was trending down from more or less in most facets since like September.
Yeah, September was quiet, but J.B. Hunt has an intermodal presence there, which actually in the third and fourth quarter was quite hot.
Right, right. So, let's talk a little bit about J.B. Hunt. So it was an earnings miss. Was it a revenue miss?
I think they did miss revenue as well. I can't remember exactly what they said there, but they missed just about everything in terms of expectations.
Right.
But they were up.
That was my thing. Okay, so I know that JB Hunt is about what, 50% or maybe a little bit over 50% intermodal, and I know their intermodal was down 7%. But it seems like in every other aspect there was some modest, however modest, growth.
Yeah, there was growth.
And so
everywhere.
that was to me. I was like, why is this so bad? And in fact, at the end, they said we're projecting things to be kind of okay in 2019.
I think that the intermodal, their exposure to intermodal can hurt them because as trucking rates fall apart, that is going to make intermodal, putting a box on the rail less competitive and less compelling.
Exactly, because we had a huge year last year, so that's actually going to help intermodal because shippers are going to look to put things on the rail a lot more because pricing in trucking is going to be a lot higher, and it's going to be a lot more affordable to put it on the rail.
And what the rails ended up doing last year was raising their intermodal rates right alongside trucking, and now they're getting sort of it crossed back over essentially.
Exactly.
Where now it's cheaper and you get better service to the truck. That's going to be a headwind for intermodal volumes. But even in the divisions of the business where J.B. Hunt grew volumes, the way they did it, led to kind of flattish net earnings growth. So I'm thinking especially of the brokerage division, ICS, which is Integrated Carrier or Integrated Capacity Solutions.
Okay.
Their volumes were up 14.9% year over year. Their brokerage volumes were up 14.9% year over year, which is great.
That's tremendous.
It's tremendous. The revenue per load, though, dropped 11.6%. So the revenue per load was about $1,100 in the first quarter of 2018. It dropped to about $1,000 the first quarter of 2019. So what they did was they knew that the spot market wasn't going to be as strong. They went out, they aggressively bid on contracted freight. They wanted more contracted freight volumes. They bid aggressively, so lower prices, and that's what you end up with. And you end up with flat earnings flat margins and flat earnings on that.
Yeah,
and that's exactly what we were expecting. I mean, we called for that months ago.
Well, whatever the strategy behind that, I think that we noticed though that J.B. Hunt was making more per load in truckload.
But that's also based on increased pricing contracts. So a lot of their contracts got implemented in probably late first quarter last year, and throughout the year they might have actually implemented another rate increase if they were a lot of them were expecting at least 2 to 3 rate increases last year. So they could have actually implemented a few more rate increases throughout that process. So that's why you're going to see an increased revenue per load aspect on there, not necessarily increasing volume in the first quarter.
So they're making more on anyway. That was interesting about the brokerage play, and I don't know what was behind that, but it sounds like they were making moves. But
no, that's a totally natural process. Anytime that the market stabilizes and falls into more balance, the contracted freight, the dedicated freight, managed transportation, consistent volume becomes the play versus the transactional market and the spot market where you can go and get this huge volatility. You're going to get a lot more margins in those, But you're not going to have the consistency of the contracted and managed transportation side.
Yeah, and if you look at the OR for their truckload business, you can see how the sort of negative growth in rates has affected it. I mean, I think what was the OR in trucking? It was like 99%.
Yeah, it was
98%.
It was really high. And that's first quarter for trucking is really hard. You have low utilization.
You've talked about that.
Yeah, low utilization is a plague on the trucking industry in the first quarter. And, a lot of these earnings people I noticed have added capacity. They bought trucks last year, which is we looked at it in our own data, some of the new truck orders, record volumes last year, et cetera. But to actually read about it and being reported as J.B. Hunt added another 100 trucks here, it's hard to do that as a trucking company because you have to be able to commit to utilizing those trucks.
Yeah.
You're going to have that truck.
They added a lot of trucks.
You don't just clear your fleet out quickly. It's not like, well, we bought them, but no, we're going to decommission another 200 when times get soft. It doesn't work that way.
Well, let's back up a tiny bit. Let's think about prisoner of the moment. I remember last year, about this time, oh boy, things were getting hot, and they were just about to get hotter. And we were all really going okay, we were talking shipper of choice. We were talking about pendulum swinging. And we were like, maybe the pendulum's not going to swing. Maybe we're in a new normal. And, and actually, I feel like if maybe we had listened to the economists, maybe we wouldn't have, if we had really listened to the economists, I don't know. Because I think around this time and a little bit later into the year last year, our chief economist Ibrahim Bayan was saying, okay, these factors are moving us forward, but in so many terms, even at this point last year, he was saying it's not all of these things are sustainable. Yet we went on, we got crazy, we thought new normal, and we added all of this capacity to the market.
Yeah, no, and that's anybody does that. I mean, they have to, a lot of these companies are tasked with growth. And how is a trucking going to grow other than building their fleet and gaining market share?
That's the bottom line, isn't it?
And
right. And if rates are favorable, then and you've got extra cash on hand, shouldn't you use that to buy another revenue generating machine?
And rarely have carriers had the opportunity like they had last year where they had so much extra cash on hand. I mean, it's kind of like winning the lottery for them, especially
the tax cut.
Yeah, a tax cut helped out a ton. So they're going to be able to actually utilize these trucks regardless of any kind of capacity changes.
Let's bring it back to what are they? I think some ways you're saying you could cite these headwinds or you could cite headwinds on any given quarter and make them sound pretty similar to what they're saying now.
No,
but what are the headwinds they're saying this time?
No, this was a significant headwind. This was I guess I should back.
Well, we've got weather.
Yeah.
We've got tariffs.
Yeah,
we've got what else, guys? There's
the weather was significant too. I'll just say not just because it made it harder to move trucks, but
flooding in the Midwest.
Flooding in the Midwest really disrupted BNSF's network in Nebraska, especially in Nebraska.
Polar vortex in February.
And BNSF that's the main rail used by J.B. Hunt to move its boxes.
Oh, okay.
Yeah.
So, gotcha. What else? Weather. We got weather, tariffs.
Volumes were actually not so down, but they weren't up as much as they needed to be. Especially when you're adding a couple of hundred trucks.
Government shutdown.
Government shutdown was a big one that they cite, but I don't.
No one explained exactly how that affected them.
I don't really buy that one so much.
Yeah, yeah. I think it might have affected economists who were delayed in their data.
Well, I mean, the economy is slowing compared to last year as well. We're not seeing the
economic growth is slowing.
Yeah,
the economy itself
globe for sure.
It's not contracting.
Yeah,
absolutely.
No, and I mean, and a lot of our own data suggests that a lot of the volume is actually moving differently than it was last year. So it's going shorter haul versus longer haul as well.
But in general,
which is bad for asset utilization, bad for revenue per truck per week.
Yep.
I don't know how much I'm skipping ahead here for what you guys want to talk about with JB Hunt, but I guess overall, like the prognostication is that there were these headwinds, and like moving into Q2 now, which would take us up to the first half of the year, no one seems unduly alarmed. In fact, most are like, it seems like we anticipate some modest growth. Unfortunately, there probably will still be this added capacity factor that we'll be dealing with. And as far as anyone can see, acts of God notwithstanding, I think we're anticipating, for whatever anybody might take these prognostications for, like some modest continued uptick.
Yeah,
is that fair enough to say?
Yeah, for sure. I don't think anybody's overly concerned. I don't think anybody's getting super depressed about the upcoming months, because we're about to enter the busy season for freight as well.
Right.
So it's not going to get, I can't say that definitively, but it should not get worse after the first quarter.
Q2 is pretty much always healthier than Q1 in terms of volumes. Now, if what really matters, though, is how much slack there is in capacity, and whether
Weather won't be a factor.
A normal no, not. I wasn't saying weather. I was saying, and whether the volumes growth will be enough to affect capacity availability and bring rates back up. That's really the question.
Yeah, how much they'll bring them back up. Rates will probably go back up. I mean, they're going to go back up. It's just a matter of how much.
Well, you heard it right here on What the Truck. Rates are going up.
In Q2. From Q1.
It's kind of like me predicting, winter arriving around December 21st.
Yeah. No, it's basic seasonality.
Okay. Well, I think we beat that dead horse. No, it was great. JB Hunt, Bellwether, leading us off. Actually, can I just ask one last question?
Go for it, Chad.
Because I don't mind being in the student mode here.
All right.
So JB Hunt is exposed to intermodal, and
Yep.
So is it almost like a strategy where it's safe in some way?
Yeah.
They might always be exposed, but they're always a little bit safe because
it's a hedge for sure.
It is.
Yeah, it is a hedge. I mean, intermodal is a stock that you buy.
One will overflow to the other.
Exactly. It's the dedicated freight. It's the managed. It's the contracted freight. It's the same mechanism, and intermodal is to just basic truckload.
Huh.
Yeah.
Okay.
Because it's very consistent. People always need it. At the same time, though, there is some indication, especially who knows what's going to unfold with the tariffs and all that, because all the intermodal freight is heavily dependent on international trade and how that works out. But right now, too, something that we didn't talk about is the fact that a lot of this international freight that got pulled forward in the early part of the year, or in the last half of 2018, was out in Los Angeles, in Savannah, et cetera. And then all of a sudden there were all these full warehouses, and they're not necessarily putting it to the rail. They're moving it interregionally, which is not a rail activity typically.
Right. Short, medium.
Short hauls are not a rail thing. So,
and what was it? Was it an executive from JB Hunt who used the phrase something like, "Our customers need to bleed off some inventory before we're going to see an increased rate of container box moves"?
Absolutely. I think you're right. I think we're going to see some discounts this spring and summer too. Just based on the fact that we should have excess inventory in a lot of these warehouses and a lot of these customers. So I think anybody that's savvy and up on their economics should be looking for some discounts this year because of all the excess inventory. That's just natural process for a lot of these bigger stores and customers.
So it hurts consumer price indexes. That goes down, which makes the Fed lower rates again, which gives Donald Trump what he wants, which is the stock market.
And the pendulum swings back the other way.
We're putting all the puzzle pieces together right here, right now. It just took a little longer. Okay, so we're talking about in our headlines, we've got two other interesting, more specialty kind of freight stories. Marten Transport is they on the outside, if you don't know the Wisconsin-based carrier, they are, if I'm not mistaken, more of a reefer. Like they're more. Anyway, they're a tenth. Let's say this: they're a tenth of the size of JB Hunt in I don't want to say significance, but in size. JB Hunt, by the way, their earnings were almost 120 million in net revenue.
Thank you.
This year, and Marten Transport about a tenth of that. As I understand from reading Clarissa Hawes's 2 articles here. She's one of our new editorial correspondents that's taking on trucking. So anyway, Marten, though, is blowing it out of the water. And in a minute, we will get to, in a few moments, we'll get to also Dean Croak's amazing article about Las Vegas and flatbed. But so let's hit Marten.
Oh, I love this one. I love Marten because they actually declined in terms of year-over-year quarterly revenue. But they're
so you're like putting the twist on the.
Oh, I love it because the OR actually went up on a revenue decline. This former pricing analyst.
Yeah, that's one of your hobby horses. You love when sales guys turn freight down because it's not profitable.
Oh, it's so fantastic to see. This to me is a huge signal of operational efficiency. If you can lower your revenue and increase your profit margin, that's a dream for a pricing guy. That means that you have discipline. You are able to operate effectively. You're not getting outside of your comfort zone too much. It also shows a little bit of foresight. Because that's hard to do in transportation. It's hard to see what's coming up next. And these guys, you don't just change your operational activities overnight. There has to be some sort of planning. So there had to have been some sort of directive here that kept these guys tight within their the way that they operate.
No doubt. I mean, it's almost like what I was kind of asking about, a few moments ago about, just can't we, if we would listen to the economist, if we would pay attention to history and not just be prisoners of the moment. So what do they do, guys? What's the lead here? It's a short article. There's not a lot of analysis. What do they do? What are the facts?
Well, just to give clarity, the operating ratio was 92.7 last year. They went to a 91.1.
So 150 basis point improvement year over year.
That is, I can't emphasize how big of a move that is.
Really?
Yeah.
I mean, I know you brought your ERA down a little bit.
No, for a trucking company with
of that size,
of any size,
size,
when you move your OR that much and a quarter over quarter, that's tremendous. Especially when the market is softening. I can't emphasize that enough.
Wait.
That's cool. That's good analysis. Right,
but that's year over year, though, not quarter over quarter.
No, it was quarter over quarter.
Oh,
yeah.
Yeah.
That was first quarter 2018 versus this year.
I thought that was.
So that's year over year. Then.
Yeah, year over year, but quarter over quarter.
I thought you meant sequentially.
No.
I thought it was year over
I'm
year.
Sorry, it's year over year. It's 2018
first
quarter
over year
versus 2019.
Okay. Yeah, that's great. I mean, especially because, again, very, very tough comps, and we're going to hear that phrase all year, really, in these earnings calls. Basically, people saying that, hey, you can't expect me to grow my net earnings that much compared to 2018, which is one of the best years ever for trucking. So the fact that they're running more efficiently than they were the first quarter of 2018, which was unexpectedly and ridiculously hot for freight. If you guys remember.
Yeah, no.
Yeah, I mean, I was a prisoner of that moment. I almost though, with all this year over year stuff, I'm starting to want, when people do the year over year, I'm wanting to throw 2018 out. I'm wanting more of a lay of the land.
As a data guy, you can't do that.
I can't
you can't do it. You can't.
It happened.
I mean, people throw out.
Happened.
Yeah, I mean, especially since it's so close to the vest. Now, if we're 5 years down the road and things don't go back or change at all, then you can throw it out as an anomaly. But
and if you're in 2017, you can't just throw out 2016.
No,
right?
exactly.
As bad as that was, right?
Yeah.
I get it. Yeah. Okay.
No, if anything, the new normal actually means it's a lot more volatile. We've swung so far so fast, and
the cycle is increased magnitude, decreased duration.
Yeah, that's a thing.
Which is
deep thought.
It's hard. So it's hard to be efficient in that kind of environment.
No, especially for an industry that relies heavily on operational consistency. which is hard to do. I mean, it's when you're trying to figure out, I need to go from point A to point B to point C consistently and every day, and then all of a sudden the weather, there's hurricane every other day. Like you can't. It's hard to manage through that.
There's trade stuff. There's the economy decides to start growing at 4%.
Yeah,
like it's difficult to, like you said, like keep your nose to the grindstone, stay disciplined, not get too greedy. And I think and
don't knee-jerk react to every situation. Former pricing analysts, we always were prisoners of the moment every single time and said, well, volumes are down. We need to get freight moves freight, guys. So let's go out there and get some more freight on our trucks. And inevitably, you'll price yourself out of business that way if you hold that
just
mantra.
by get freight.
We're losing $5 a load, but let's make it up on volumes.
But it's better than losing 100% of your depreciation on your truck or your driver.
There are these
quitting.
Considerations to make. Yeah. Okay.
Yeah. So it's tough, and that was one of the. Yeah. Anyway. So Marten, much smaller than JB Hunt, still running a really impressive operation. Again against even compared to a historic year last year.
Can I venture this, though? So they are a lot of specialty freight, a lot of reefer freight, a lot of temperature-controlled stuff. With the weather volatility, maybe they were maximizing some opportunities.
That makes a lot of sense, dude, especially if you think about what the reefer turndowns in the Midwest have been like this quarter.
Super high in certain markets.
You look at the polar vortex, which... I've got a bunch of broker friends who do a lot of reefer. It killed them, but because spot prices for reefer went nuts in January. But if you're on the carrier side, it's amazing. So that might have been part of it. I wonder. I mean, severe weather can be a headwind for intermodal. It can be a tailwind for temperature controlled.
Right. Well, good stuff. Interesting. One of the most interesting articles that I read all this week was the 14-pager by Dean Croak, market expert. Man, he is a wealth of knowledge. Love talking to Dean every single time I talk to him. Always learn something, often about sleep. But in this case, man, he can jam on some flatbed. And, this article that I encourage our readers to read, almost just like a feature story in a magazine. What gets hauled to Vegas stays in Vegas is really cool. Lots of stuff happening, guys. I don't have all the data in front of me, but I'm just there's all this construction activity happening in Vegas because they want to be, and I find this kind of funny. I find it's like a politician statement, but they want to be a recession-proof city. But seriously, they have studied other cities.
It's a fantastic concept.
It's a fantastic fantasy.
No, but I grew up in Nashville, Tennessee. Yeah. So everybody thinks about it as the music city, and it actually is relatively recession-proof in terms of
you've got higher education, you've got healthcare, you've got entertainment.
Healthcare is notoriously recession-proof. And that's why Vegas
it's a thing. I get it. But what's funny to me is every few years you hear about how this is Las Vegas is the city that's going to evaporate when the Colorado River
it's not climate change proof. could be recession proof.
Okay, fair enough. But I was just out there at the TCA conference. So were you, JP?
So is Dean. That's where a lot of the story came. That's where the story came from.
Yeah, and so we saw, man. I mean, the climate's delightful, actually, and and I totally don't get into the casino thing. If I just don't, I just haven't. But I was there's a lot going on here,
and a lot of construction activity. If you looked at the skyline, you would see about 16 massive tower cranes. I think part of the sort of spark of inspiration for this story happened when Dean went to this really big truck stop outside of Las Vegas, which is one of the main, I guess, places to fuel and stuff before you drive across the desert. And he said that there were literally dozens of flatbed trailers full of this really specialty structural steel.
And apparently, according to his article, about a third of all of the steel that they're bringing in for this new Oakland Raider Coliseum, of course, there'll be the Las Vegas Raiders then, is coming from Wisconsin. So they're hauling in.
That is a long haul.
It's a
Super
long ass flatbed steel.
That's a heavy analog.
This kind of industrial
It's
steel.
a 2-day drive.
They're bringing in. One of the big problems, though, is they're bringing this stuff in, and then it's a backhaul market still. So they're having to look at well, okay, great. There's a lot of stuff coming in, but I've got like an A, B, and C opportunity for my backhaul, and if that don't happen, then I'm going like 400 miles for my next opportunity.
Yeah, I think this whole backhaul, head haul thing. So the market itself is consumption oriented. Not a lot of production coming out of Las Vegas. I think everybody goes there to consume things. I mean, think about it that way. They're going to the casinos. They're going to be tourists. They're going to,
Eat,
vacation.
Drink, and be merry.
But and just to add real quickly, one of the recession-proof aspects is they're also though trying to appeal to the people who actually live there. That's one of the they're trying to make Las Vegas more like that.
People live in Las Vegas?
I know. Even after the 2008 thing that happened.
Yeah. How do you live in Las Vegas? That's got to be a thing.
Okay. Didn't mean to interrupt you there.
I wouldn't survive that long.
No. It would be I would have already been gone. But no, the fact that it is a consumer market purely, it is very close to Los Angeles though, which
relatively.
It's very close. Like it's a day drive easily, and you can get there and back in a day, no problem in a truck.
Like 6 hours? I'm totally naive on this.
No, it's not even that, dude. Is
it 4?
No,
I would say it's like 2.5.
It's that close.
I think it's like a 2-hour drive, dude.
It couldn't be.
Yeah,
it just couldn't be.
It's not far.
That is astounding.
Yeah, no,
it's like Connecticut to New York.
It's not that close, but it's in that vicinity for a trucker. I mean, actually, it's far better for a trucker because it's more open highway than it.
I know we can Google these things, but we're trying to bring it to you right now.
4 hours and 10 minutes.
4 hours. All right.
Come on.
270 miles.
It's longer than I thought.
2 hours?
Okay.
Really?
Sorry. Well, if you're in a hydro,
Okay. All right, Mr. Market Expert. No, seriously, you're saying it's a consumer...
It's a consumer market, and they're going to consume a lot more freight than they're going to produce. And that's because there's not a lot of production. There's no manufacturing. I mean, freight hauls material goods. There has to be some sort of product that they produce. And yet, that's what Dean was talking about here, is that it's actually going to become even more consumer-oriented as the construction materials flow in. But what do they make in Las Vegas? Their main product is entertainment. It's tourism. It's all this other stuff, and even the sports medicine. Sports medicine is not.
Sports medicine.
You can't put that on a truck. I don't know if you know that.
I can't put
sports medicine on a truck.
Yeah, it's a hard thing to do.
What do I do?
So effectively,
it's a service economy.
The way that I would think about this as a pricing guy is I would just build that into my rate. I would be moving my truck in there, knowing that I'm going to go at minimum, the 267 miles to Los Angeles to go get another load. Period.
Boom, done.
Yeah, there you go.
All right. Another takeaway from What the Truck right here. Man, you guys, we're just bringing it, aren't we? It's so fun. Award-winning for a reason. Hey, let's move on to FreightTech because a lot of things are happening to FreightTech, and we're a part of it, and I'm so excited. And I just can't hide it. No, so FreightTech investment, it surges so far after the first quarter of 2019. And we have a lead of these 4 headlines that we've got to kind of run through here. But the lead headline is Linda Baker did some coverage of what PitchBook and FreightWaves, they crunched some numbers, and we found out that 4 of the 5 largest venture capital deals in the first quarter of 2019 were going to companies that move people or stuff. And the other 3 headlines, Vishnu Rajamanikan, Vishnu, our correspondent in Germany, covers a lot of the tech stuff and really good coverage. And so we wanted to hit on some of these things. Guys, I mean, what is happening in FreightTech? Is it insane? Is it compared to, like, you want to compare it to FinTech? I mean, I don't know.
I mean, I don't know that much about fintech, honestly. But
Well, do you, Zach? I mean, being the banking guy?
I mean, I wasn't a banker, so I mean, I was way
Being
back
the
when.
finance
but,
pricing market expert
no,
guy?
I think
I'm not as up on that.
The big
Okay.
the big takeaway from this study is that the first quarter of 2019 had more VC money flowed into FreightTech than in the first half of 2018. So it's already 2x growth, right?
Yeah, no, I think everybody's realized that there's a huge need there because transportation is notorious for not reinvesting in its product.
And to add and greater than the entire year of 2017.
Yeah, no, the investment cycle in general is pretty large right now, but at the same time, transportation is lagging in terms of technology.
Yes.
A lot of these carriers, even brokers to the extent, are working on technology that's 10 years old at minimum. And they're, constantly behind the curve because a lot of the margins don't give them enough cash for them to go out and make a investment in any kind of technology. When we were evaluating back in my old life, buying some new software or whatever, we had to make sure that the risk was worth the reward. And for a company that makes 7% margins, there's not a lot of things that are worth the risk because when you go out and implement a new software, there's actually a high percentage that could put you out of business if your integration does not go accordingly.
Yeah.
Especially when it comes to billing and pricing things, which was where I was. And we had to turn down a lot of software because there was a 50 to 60% failure rate with integration. It doesn't mean the software was bad. It just means that in the process of integrating the software in terms of billing cycles, because like I said, if you don't, going back to your earlier thing on the Wintrust thing where carrier or brokers need enough cash to operate, like carriers operate on very low cash flow in general, relative to their size.
Right.
And so if you miss a day of billing, you've put your cash flow cycle way behind. You may not be able to pay people. Like there's a large risk there. So if that's why you walk into some of these carriers and brokers and they're operating on this, you look at a green screen. That's why. It's because they've got all this infrastructure built out.
Yeah, well, one of the things that is fascinating about FreightTech is simply that, and here's a takeaway from this article, is that it's growing exponentially faster than even FinTech did. Whatever the concomitants that go into that, ingredients mean, it's grown from 118 million to almost 3 billion since in like a very
5 years. Yeah.
5 years, which is a multiple of 25 in 5 years.
But that makes sense. I mean, the financial industry, everybody looks to that because it's naturally money oriented. Like they're going to go out and look at things that are going to give them the best opportunity. A lot of these software people are going to look at things that are going to give them the best chance for making a lot of money really fast. And where's the first place you look?
People that have money.
Exactly.
Thanks.
Or the people that specialize in money. And transportation is way down there at the bottom in terms of where.
But it's growing fast. But now it's growing faster than FinTech did.
Because there's such a lag. There's such a huge
and that must be the explanation.
Yeah.
To me, that's the explanation.
Well,
is the lag. It's this pent up kind of demand that we're.
Yep. And there's a lot of opportunity. It's fragmented. I will say this too.
That's why it's partly of why it was pent up.
We've seen 24, 25x growth over the past 5 years. When you think about how rapidly venture capital backed firms grow, that also makes sense. When you think about the sort of a maturing VC marketplace, right? Mm-hmm. So, Flexport didn't even exist in 2014. Did it?
And
when was it? It was
I
founded.
don't know.
It was founded like probably right around that.
But
that time.
Flexport, the freight forwarding.
And this year they did a big.
Startup.
They had $1 billion raise, right?
Yep,
So-
they're leading all
so
of
the
the
companies-
FreightTech VC funding.
The companies that were doing Series A in 2014 are now doing Series D, and the size of those raises is growing, sort of as one would expect in a way.
And a couple of speaking of some of these headlines that we covered this week, the on-demand warehousing startup FlowSpace raised $12 million in a Series A, which is a standard Series A amount. JP,
for FreightTech, yeah,
it's meeting a need, right, in warehousing space.
Yeah, so we've talked a lot about last year we talked a lot about tight trucking capacity, but we also talked about tight warehousing capacity.
Right. It's still tight
with the explosive growth of e-commerce. Warehouse square footage utilization is going up faster than new warehouse space can be built in a lot of, not just in the port cities, but really sort of in any city. I mean, a prime example is Joliet, Illinois, where they're building warehouses like crazy, and the people that live in the city are actually kind of getting freaked out by it and trying to slow it down, and it's not going to.
Well, that real estate is expensive too, so that's one reason why.
Yeah, and what FlowSpace does is it's a sort of a digital marketplace for sourcing on-demand warehouse capacity.
There's got to be a way to
and it's
automate.
It's like a monthly subscription, and it's designed for high growth e-commerce retailers that don't know how much space they're going to need. They might have a clue about how much space they need this month. They have no clue about how much space they'll need in 4 months, and so this is a service that sources that for them, helps them manage their inventories and move their product. And and sort of grow and shrink in a really dynamic, cost-effective way.
That's really cool.
It does seem to me that would be a way to increase one's operating ratio.
Yeah, I think Well, I think we've also entered this space in the economic cycle where warehousing. I think a lot of people are. It's the perfect storm for warehousing, where we had all this freight come into the country in 2018, early 2019, and now it's. And then this e-commerce situation, a lot of supply chains are getting redesigned. You're going to have this, DCs closer to the end user type situation that's coming on board. So there's been
smaller, but with faster throughput.
Yeah.
And so, I mean, there really is a lot of tech interest in the warehouse space, whether it's robotics, whether it's voice solutions for human pickers, whether it's, just new kinds of inventory management technology, sorting, tracking. Like I know that LTL companies are looking at visibility solutions, not just for the tractor, which doesn't matter as much, but the actual pallet and the parcel.
It's very expensive right now. It's a little cost inefficient. It's not cost effective.
Right, but eventually, eventually, what you're going to do is have a VC-backed company burn through a bunch of money making something really and selling it for really cheap.
Right.
Well, speaking of automation and efficiency and moving people in this case, how about Volocopter, the German autonomous air taxi company that's working with Singapore authorities to get these autonomous helicopters, or as we call them, vertical takeoff and landing (VTOL) aircraft up and going. Guys, I'm so excited about this. What do you think about it?
No, I'm not excited.
Well, why not? What?
You do it first, Chad. You do it first.
We'll tell you why.
Oh, you mean you want me to get into one of these autonomous helicopters first?
Absolutely.
Will you guys film
first.
it if I do?
Can you put your stock options to me in your will?
What are you so scared about?
I just think
Come
okay,
on.
helicopters are already way more dangerous than planes, right? But at least when you're in a helicopter ride, you know that there's a human pilot in there who also wants to live through the experience.
Got a motivation.
And we'll do everything he can do to not die.
Well, here's what I'm hearing. I'm hearing fear. I think that might be a consumer headwind of these. But I somewhere I want somebody to start efficiently Like let's get there. Let's get there.
I want Volocopter to have some skin in the game if I'm getting in this copter, dude. I'm serious. Like
It does.
Really?
It does not appeal to me. I'm going to be honest. Like there's the risk reward thing.
We're
again,
in Chattanooga. We're in Freight Alley, Chattanooga. Maybe we don't have as much of a need, but if we're in a densely populated area and you want to get somewhere that you know as as the crow flies, you could get there in 5 minutes. That's going to take you 45.
For the person
I'm taking me a Volocopter.
For the person who says I would rather die than drive through Singapore traffic, it's for that person because you might end up doing that.
Nice. Okay. Okay. Well,
Love it.
Anyway, I don't know what to say to that, but
I mean, it's cool. It's cool and all, but I mean, dude, it's.
I need to see this thing happen. Like
you
a
would
lot
see it
before
before
me.
you got on.
Yeah.
Yeah, someone's got to take the risk.
I'll be a late adopter.
Well, we couldn't even get high-speed rail here between here and Atlanta, so I don't think we're going to be having autonomous helicopters anytime soon. I guess it's something we don't have to worry about. ValueAct Capital, another one of our headlines, is they just believe in Nikola as a game changer in the freight industry. I think that's how you pronounce it, not Nikola, by the way. I think we have been covering Nikola for quite some time, and we're believers. We're believers too. Like we dig it. We dig at some hydrogen fuel cell. I think that I dig it from the fact that it seems like it is still a zero emissions game. They're actually they're producing things that seem like very real and tangible. They're not having to deal with battery issues. And finally, perhaps most importantly, well, maybe not, but just as importantly, their infrastructure seems realistic. Like they've got real plans. So I don't know. Like, is Nikola the deal, or what? What do you guys think? I mean, do you think it's the Tesla semi?
It's tough, man. It's. I'm gonna say that it's very, very, very hard to build a brand new OEM of anything.
They've been doing it for years at this stage.
Yeah, but they're still trying to they're still trying to raise another $1 billion. They've bought
you got to do that.
Hundreds of acres, I believe, in Arizona to build a production facility. I mean, they're not really in the game yet.
Okay,
they're not as far.
Fair enough.
So I think it's potentially very cool, but I mean it's high risk. It's a big get. What I'm saying. It's
if anybody's going to do it, who's going to do it other than them? Like, it's going to either be like everything. It's
going to be them or nobody.
It's going to be crash and burn.
Oh, don't use that analogy.
Oh, sorry.
We're talking.
It's going to be.
Yeah. Did you see what happened to the Hindenburg?
Yeah, hydrogen and burning is not great.
Yow. Okay.
But
you guys are really cautious.
It is the most abundant element in the universe. It is the most abundant element in the universe.
No,
you can't say that about cobalt.
It's kind of like high upside, but you got to figure out some basic stuff first.
That's what I feel like they're doing. It seems like, to me, the battery stuff, and as much as I want that electric stuff to be happening, I'm sad, but the way that they source it, the weight of the batteries, the length of honestly, even in 20 years, I don't really see the electric battery doing it. I don't see it, certainly not for semis. Well, but I could see these hydrogen fuel cell opportunities. I think happening.
I think these environmentally friendly things are very awesome idealistically, but there's a reason that we haven't progressed beyond the internal combustion engine, even though technology has moved at far greater rate than
it's
that
not because of like the oil companies.
No,
I know.
There's infrastructural things there in place, but also the fact that people can't produce a lot of revenue when you have legitimately solved the problem of the resource. Like, if there's enough, there's a lot of water on this planet. And hydrogen is a big part of that.
99% is, salt water. Okay. Well, guys, this has been an amazing episode. Always so glad to have Zach on, man. He could fill up hours with his knowledge. It's great to have you on as always. But JP and I are going to try to run the gauntlet with a big deal, little deal, and see if we can pretty much hit this hour mark. So, JP, are you ready to play? Ready or not, here we go. Canada to appeal WTO ruling over U.S. softwood lumber tariffs. Big deal or little deal?
I mean, I think it's a little deal. I don't think the tariffs are affecting the price of lumber, which those prices have really fallen off the map, back below $400 for 1,000 yard feet, or 1,000 random feet. So I think it's
okay. So you pretty much just destroyed the 2-minute thing right there. Okay, over 20 years later, Lixt continues to evolve alongside the industry it serves. Big deal or little deal?
Little deal.
I'm trying to catch this up,
dude. I'm trying to catch this up.
FreightWaves and TIA announced sonar data partnership. Big deal or little deal?
I think it's a big deal. I think the brokers have some of the best data in the industry, and it'll be cool to see what our scientists can do with it.
Kansas City Southern's first quarter net profit jumped 16%. Big deal or little deal?
It's a big deal because they are one of the best self-help stories left in railroad. They have the most kind of internal improvements that they can drive. Government watchdogs urge review of underride guard requirements. Big deal or little deal?
Little deal. It's part of a long process toward safety improvement and better design for trucks.
Record-breaking snow season breaks Sierra Nevada drought. Big deal or little deal?
Big deal. We've seen this develop all winter. There was a lot of precipitation, and it's great that such a huge produce market of the U.S. is officially out of drought.
E-commerce breeds algorithmic-based pricing conspiracies. Big deal or little?
The trend is a big deal. Companies are using data to exploit consumers in insidious ways, and there has to be a way to fight back.
Manufacturing stalls again, capping a disappointing quarter for freight demand. Big deal or little deal?
Little deal. There have been a lot of headwinds in the first quarter. It's not a trend until we see how things conclude through the first half of the year.
158.
Well done, guys.
Booyah.
I'll be honest, I didn't think you were going to make it.
You're welcome.
Yeah, it was. We had a good recovery.
Hey guys, great episode, and thanks to TriumphPay for their sponsorship. It is great to be here, and we will be bringing you everything that you want to hear again about your weekly market playbook next week. As always, we go into more detail about each of the topics we've talked about today on our website, FreightWaves.com. We will continue to publish this podcast weekly, so be sure to subscribe to What the Truck on Apple Podcasts, Google Play, Stitcher, and SoundCloud. Also, make sure to leave us a review to let us know what you think of our new podcast. That'll do it for today. Thanks for tuning in, and we will see you next week on What the Truck.